Ladies and gentlemen, good day and welcome to the Krishna Defence and Allied Industries Limited H1 FY22 and full year 22 earnings conference call hosted by HIM Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asta Jain from HIM Securities. Thank you, and over to you, ma'am.
Thank you, Rituja. Good afternoon, ladies and gentlemen. Thank you for joining the Krishna Defence and Allied Industries Limited H2 FY22 and full year 22 earnings conference call. From management team today, we have with us Mr. Ankur Shah, Managing Director, and Mr. Piyush Patel, Chief Financial Officer of company. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be responding to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature. The actual results may vary from these forward-looking statements. I would like to hand over the call to Mr. Ankur Shah to commence by sharing his thoughts on performance and progress made by the company. Thank you, and over to you, sir.
Thank you, Asta. A very good afternoon to all of you, and thank you for coming for the investors conference for financial year 2022 for the financial results. Firstly, I would like to thank all the investors for believing in Krishna Defence and giving us an overwhelming response to our IPO. Let me start by introducing myself. I am Ankur Shah, Managing Director of the company. I will give you a brief overview of the company's business and will then take you through the financials, post which we will have the Q&A session. A bit about me. I am a production engineer from Father Agnel College at Bandra, Mumbai, and joined the company in June 2000. The company was started in 1997 by my father, late Mr. Ashwin Shah, who himself was a double engineer in the field of mechanical and electrical. We started off very small with about 12 employees and about 2,000 square feet of shade, which have now grown to 200 plus strong team and a factory spread across 100,000 square feet. We have a registered office in Mumbai and have two plants in Baroda, Gujarat, one in Halol where we manufacture products for the defense, and in Kalol, again near Baroda, where we manufacture equipment for the dairy industry, mainly for milk collection and procurement. I know the obvious question, what is the connect between dairy industry and defense industry? And I say the connect is engineering. We started in 1997 as a manufacturing company supplying equipment like stainless steel milk cans, milk cooling tanks, and milking machine for the dairy industry. During this journey, we came across an opportunity to develop and supply a particular product for the Indian Navy, and we grabbed that opportunity with both hands. One of our prime products for supply to the defense is bulb bars. Bulb bars are shipbuilding steel sections used by the Indian Navy for stiffening of the hull of warships. It has a very unique profile which ensures that the strength-to-weight ratio is 3 times of normal structural steels like angles and channels, due to which we are able to reduce the weight of the ship. Reduction in weight of the ship helps to increase the speed. We can take more load, we can take more ammunition on the ship. We were the first to develop the bulb bars in India in partnership with a DRDO lab, popularly known as DMRL, which is Defense Metallurgical Research Laboratory, based out of Hyderabad. We were also given the Defense Technology Absorption Award in the year 2014 for our development of this product by none other than Prime Minister Shri Narendra Modi, as prior to our development, the Indian Navy was importing these steel sections from Russia. We have successfully supplied these steel sections to all the shipyards that build surface ships for the Indian Navy, which include the top shipyards, Masgon Dock in Mumbai, Garden Ridge Shipbuilders and Engineers in Kolkata, L&T at Hazira, Cochin Shipyard Limited in Kochi, and Goa Shipyard Limited in Goa. Post our successful supply of bulb bars for surface ships, we also got certified by the Russian Navy for higher strength bulb bars, which are to be used for critical applications of the Indian Navy. We, in the recent past, have added 2 new products and successfully supplied them to the Indian Navy. These include zero magnetic permeability steel ballast bricks, which are used for balancing of critical vessels, and the steel having zero magnetic permeability properties is very difficult to detect. The other product that we have successfully developed and supplied, these are complex alloy weld consumables which are used for welding of very high tensile plates. Again, the application for them is critical navy applications. Both these were an import substitute. Even this year, we've added a few products for which we have taken transfer of technology from other wings of the DRDO, which is an improved space heating device called the Bukhari, which is used at very high altitude like Siachen, where the temperatures are sub-zero, to heat up the room. We are also working in tie-up with a couple of companies, one from Belgium and the other one from UK, for development of modular vehicle barrier and multi-purpose launcher. We've already started work on the same and will be supplying them within this year itself. On the research front, on the development front, we have been assigned a project by the Navy for developing an ammunition for a particular naval gun. We are working towards that, and we should have some sales of them post-successful development in the next financial year. We as a company have set a target to grow our revenues at the rate of about close to 40 to 50% year on year for the next 3 years, keeping into mind the Make in India and the indigenization program of the Indian Navy. This is in brief about me and the company. I hand over to our CFO, Mr. Piyush Patel. Over to you, Piyush.
Yeah. Thank you, Ankur bhai. Good afternoon, ladies and gentlemen. I'm going to give you financial highlights for the FY22 and S2 FY22. Now, coming first to the total revenue. Total revenue of the organization for the FY22 is stood at rupees 50.34 crore as against the rupees 36.33 crore in FY21. So thereby it has shown a growth of 38.56%. Now talking about the EBITDA, our company reported EBITDA of rupees 7.06 crore in FY22 as against rupees 5.71 crore in FY21, and it has registered a growth of 23.64%. Now talking about the PAT on year-on-year basis, PAT has surged by 32.26% to rupees 2.46 crore in FY22 as against rupees 1.86 crore in FY21. Now coming to the S2 FY22 results, first we look at the total revenue. Company has achieved a turnover of rupees 29.36 crore in H2 FY22 as against rupees 20.98 crore in H1 FY22, and shown a growth of 39.94%. Now talking about the EBITDA for the second half of the FY22, company has reported EBITDA of rupees 3.81 crore in second half of the FY22 as against rupees 3.25 crore in first half of the FY22, and shown a growth of 17.23%. Now coming to the PAT, company has shown a profit of rupees 1.24 crore in H2 FY22 versus rupees 1.22 crore in H1 FY22. So once again, I thank you all, and over to you, moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Yagna Agarwal from an individual investor. Please go ahead. As the participant left the queue, we will request people to press star and 1 to ask a question now. Ladies and gentlemen, who wishes to ask a question may press star and 1. The next question is from the line of Nilesh Doshi, an individual investor. Please go ahead.
Hi. I congratulate the management for good results, and particular congratulations on order for conducting a conference. My question is, do we collect the orders in hand?
Right. Are you asking what are the pending order in hand?
Pending. What are the order receipts in every quarter or half yearly, and what are unexecuted orders, so that we can have a some eye on the future, that what we can do in the next year.
Right. So, sir, I can tell you what the order book stands as of now. The order book is about 18 to 19 CR as of now. Predominantly shifting about 85% of that will be for the defense, and about the remaining would be towards the dairy industry.
Okay. And if I can chip in one more question, what is the payment terms like? Do we get it within 3 months, or how does the payments work?
So generally, once we, since these are very critical products, the inspection happens not only at the final stage, but in between in-process inspection also happens for these products. So there's a 4-stage inspection, starting from raw material to first stage to second stage. And once the final material is dispatched, we generally get our payments within 60 to 90 days.
Okay. And what is the cycle from order start of order to final delivery to the client, to the defense this thing?
The typical
time lag.
Yeah, the typical lead times that we take to manufacture an order ranges, depending on the size and the quantity of order, anywhere from about 3 months to about 5 months odd.
Okay. Thank you. That's all.
Yeah, thank you.
Thank you. The next question is from the line of Chinmay Bhandari, an individual investor. Please go ahead.
Hi, congratulations for the good set of numbers.
Thank
you. And my first question is there any capex plan for FY23?
For FY23, we've already done the infrastructure and the capex that is required to service the orders for the next couple of years. However, we will need some automation to be done, not automation, I say, some mechanized way to reduce the dependence on workforce. To put an amount to it, it should be in the range of about 1 to 1.5 crore.
Okay. And my next question is, how much revenue generated from top 5 or 10 clients?
So for us, in terms of the defense, for the bulb bars, we have 4 or 5 clients, which I explained, which is Mazgon Dock, GRAC, CSL. So all the business comes from all of them. It's distributed depending on who's making the ship and at what period have they placed their order.
Okay. And my last question is, what do you think are the sustainable EBITDA margins in the long run, according to you?
For the defense business, we anticipate currently, I believe we are about in the range of 15 to 20% EBITDA. But as you know, with steel and specialized products, the more you produce, the better, the more economical you get because of economies of scale. So once in the coming years, we see a significant improvement in our EBITDA margins.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. Before we take the next question, reminder to the participants, to ask a question, you may press star and 1. The next question is from the line of Shubham Jain, an individual investor. Please go ahead.
Hello, sir. Good evening.
Good evening.
First of all, congratulations, sir, for good set of numbers. Sir, my question is, we have seen significant inflation on metal commodities. So how will this impact to our company or what is way to mitigate it?
Sir, absolutely spot on. There have been significant increase in steel and commodity pricing. However, in our case, most of the products that we do, the raw material component is about 25 to 30% vis-a-vis the ratio of the finished product. So we are not that heavily impacted by the increase in raw material price. And as it is, we have almost finished most of our orders that were in the prior period, except the orders that we have in hand. The newer orders that we are going to be bidding for, we will be accounting for the new increase in price that is in store.
Okay, sir. Sir, my next question is, can you give segment-wise EBITDA margin? You just mentioned that 15 to 20% your aggregate margin will be for the year. So I just want to see there's some guideline for segment-wise EBITDA margin if you provide to me.
Yeah. So for the dairy industry, the EBITDA margins are in the range of about 8 to 10%, whereas for the defense is about close to 15-20%.
Okay, sir. Thank you so much, sir. That's it from my side.
Thank you.
Thank you. The next question is from the line of Vibhor Jain, an individual investor. Please go ahead.
Thank you for giving me the opportunity. Congratulations to the management for the good set of numbers. My first question is, what are the orders in flow to company over the next few years?
Right. Thank you. So as I mentioned, the current order book is about 18 to 19 crores. And with the expansion of the Navy, with the current situation, and India has a 7,000 kilometers sea coast. The Navy has a very, very ambitious plan of having about close to 145 ships in the next 20 years to happen. And so we are very, very upbeat about the new naval orders that are likely to come in. Unfortunately, for the last 2 years, because of COVID and other issues, no new projects have come up. So we are expecting for the next 2 years that projects that are going to come in 19-20 will get a spillover in this current year. So we are looking at good requirement in the next few years for us.
Okay, sir. Sir, can you tell me why there is a fall in the net profit margin?
Yes, I will ask Piyush Bhai, our CFO, to answer that. Piyush Bhai, over to you.
Yeah. Thank you, Ankur. To answer your question, I would like to first tell you about the EBITDA. If you look at the EBITDA percentage, it has increased from 12.66% to 14.02% in the year FY22. But that percent has slightly gone down. So reason for the same is that in defense segment, we have added new products, as rightly said by Ankur Bhai, well consumables and ballast brake. And for these products, we have made capital investment of around 5.31 CR in the FY22. And owing to this capital investment, our depreciation expense has gone up. And for these projects, we have also recruited new manpower, skilled and trained manpower. So our employee costs have gone up from 6.51 CR in FY21 to 9.13 CR in FY22. These are the main reasons for slight decline in the PAT percentage.
Thank you. The next question is from the line of Shrishti from an individual investor. Please go ahead.
So we have a significant inflation on metal commodities. So how will this impact Krishna Defense, and what is the way to mitigate it?
Right. Thank you, ma'am. I'll just reiterate, the raw material ratio to the finish ratio for the products that we manufacture is only about 30%. So even a 5-10% increase adds only a couple of percentages to our final cost of product. In addition, we have almost finished our supplies that are there. It's only a few pending orders that are remaining with us, which should get done very soon. And the newer orders that we have bid for we have accounted for the increase in price while bidding.
Okay, sir. So, particularly I'm asking you that how we are planning to reduce trade receivables and inventory days, because that's what I...
Trade receivables and inventories?
Yes.
Yeah. Ma'am, our trade receivable and inventory, if you see, as I've mentioned, the working capital cycle being large because it's a specialized product, and most of our clients are government, as we know. They're all shipyards. And the maximum sale happens in the last quarter. Just to put in a number, and I stand corrected with Piyush Bhai, I think the sales in the last quarter itself will be close to about 20 odd crores because before 31st March there are certain timelines to be met. So most of the supplies are enforced in the last quarter. So because of that, the trade receivable and inventory at that point of time seems higher. Piyush Bhai, can you just add on to that one?
Yeah. Right. So this is the main reason, because our sales happens in the last quarter itself. And due to these sales, we have procured majority of material in last quarter, around 11 CR in last quarter. And our credit period is around 90 days. So you can also see the trade payables are on also higher side in FY22. This is the main reason for that.
Okay. Thanks.
Thank you. The next question is from the line of Rohit Agarwal from ZN Capital. Please go ahead.
Hello. Hi, sir. So my question is basically related to is the company looking at foreign collaborations or joint ventures, since the company has built significant expertise in the defense sector? And is there any other influence from outside the country?
Right. Very interesting, sir. We are trying to explore possibilities because under the current provision of the Government of India, import of items less than 2 is completely restricted. Plus, they've come out with 3 positive indigenization lists, which items cannot be imported at all. So-called ban list, as we call it. So we are in talks with one company for a collaboration for supplying products. We'll be taking the technology from them, building it over here and supplying. But sir, it is to be honest, it's very primitive right now. We have not been able to, formalize any product. So it's still on paper. We are still talking right now.
Okay. Thank you, sir. Thank you, sir.
Yeah.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Nilesh Doshi, an individual investor. Please go ahead.
Yeah, I am again come. I wanted to ask regarding our capacity. We are doing over 50 crores of turnover in the whole year, and if I heard correctly, you said you plan to grow 40 to 50% every year. So, assuming at the end of 2024 March, we could be around 125 or maybe 1/3 more than that. So, do we have the capacity, production capacity, to do all this?
Right. So, interesting question, sir. We've already ramped up our capacity in the past 2 years. COVID time, we've tried to do those things in anticipation of a few orders, but they've not come through as no new projects in the Navy have come in. And the current capacity utilization for us is only about 35%. And we are confident that with minimal capex, as I mentioned, about close to 1.5 crore, we'll be able to service a business over 100 CR in the current capacity itself.
Okay, thank you.
Thank you. The next question is from the line of Chinmay Bhandari, an individual investor. Please go ahead.
So I have 2 more questions. First is, what are the opportunities for the company in near future in both defense and dairy segment?
Okay. So in the defense segment, our company, the existing products, of course, we are supplying as the bulb bars, the well consumables, and the ballast brakes. We plan to add on 2 products every year, in our repertoire. So a couple of products that I mentioned that we are working on is the improved space heating device, and also a particular ammunition which is to be mounted on naval guns. So these 2-3 projects is something that we are working on. And also in the dairy industry, we are working on a few automation where we can automatically clean the tanks remotely, and we can have database of the same. We have a robotic milk collection unit. So we are working on growth opportunities at both the levels.
Okay. And my next question is, are you planning to enter into some new segments apart from defense and dairy?
Sir, currently no. We wish to stick to what we are doing right now. The opportunities in defense are looking very, very promising. So we use our resources in order to utilize our potential 100% to focus on the defense as of now. That's number one priority for us.
Okay. Thank you, sir.
Thank you. Participants who wishes to ask a question may press star and 1. Ladies and gentlemen, due to time limit, this was the last question. I would now like to hand the conference over to Ms. Astha Jain for closing comments.
Thank you, Rituja. On behalf of Home Securities Limited, I thank Krishna Defence and Allied Industries Limited team for responding all the queries in the detailed way. I would also like to thank all the participants for joining this call. I would now like to hand over to the moderator.
Thank you. Ladies and gentlemen, on behalf of Home Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.